The U.S. Federal Reserve has decided to raise its target for short-term interest rates, the so-called Fed funds rate, by 25 basis points in an effort to rein in the fastest inflation the U.S. has seen in decades. It's the first time it's raised rates since before the pandemic, and several more rate hikes are expected this year. Shin Ye-eun reports.
For the first time since 2018, the U.S. Federal Reserve raised interest rates by 1/4 percentage point. The policy-setting Federal Open Market Committee on Wednesday decided to increase the federal funds rate to a range of 0.25% to 0.5%. For consumers and businesses, this increase in short-term interest rates will mean higher rates for loans. Fed Chairman Jerome Powell explained that the measure is to restore price stability amid sky-high inflation that has been running at the highest levels in 4 decades. Powell expressed some optimism, forecasting that the hike in interest rates would be a stepping stone for stable growth.
Although the invasion of Ukraine and related events represent a downside risk to the outlook for economic activity, FOMC participants continue to foresee solid growth. As shown in our summary of economic projections, the median projection for real GDP growth stands at 2.8% this year, 2.2% next year, and 2% in 2024.
But the GDP growth projected for this year is lower than what had been forecast in December. Back then, Fed policymakers had expected the economy to grow by 4% at a time when the biggest economic threat was thought to be the pandemic. But now, the Fed has detected new risks facing the global economy, mainly the invasion of Ukraine and spiking commodity prices. Finance experts in Korea also shared their thoughts on what the Fed's decision means for the Korean economy.
Raising interest rates in the U.S. may not directly affect us right now, but they can impact how South Korea changes its own rate policies. We need to consider hiking our interest rates because we're also seeing high inflation and weakening Korean won.
We expected the Fed to increase interest rates, so our financial markets were relatively prepared. But South Korea will most likely raise its own interest rates as well. This will then increase commercial lending rates, which could exacerbate our household debt burden.
The Fed has signaled the possibility of 6 more interest rate adjustments between now and the end of this year. This comes as they expect inflation to remain elevated at 4.3% until the end of 2022. Shin Ye-eun, Arirang News.